time. Again, I think, I've expressed this before, I kind of view crypto at the present as a bit like the sort of post.com bubble in tech shares. You kind of knew the internet was a big thing. You didn't really know how it would change our life. Is crypto going to be as large as that? Yeah, that's open for debate, but it's going to be around, I think. And as a result, it does seem that those assets, if they're around, there is a case for them, and especially if they're doing something different to other major asset classes. So I think over time, people have just become more comfortable with it, ultimately. It takes time to get used to new things.
It does. Speaking of new things, let's move on to the election, which is a hot topic. How do elections, just stepping at a sort of a very, very high level helicopter view of the world and financial markets, how do elections interact with asset prices, if at all?
Really good question. And I think for me, it's about how do markets come up with prices is probably the right way to think about it, in the sense that, ultimately, what is a market price? It's really a collection of people's expectations. If you're really, back to our sort of comment about house prices earlier, if you're really positive about the future and you're very certain that the future's going to be good, you're going to be willing to pay up for something, because you're discounting, you're putting a very low probability on bad outcomes. You're going to be quite bullish. Conversely, if you think the world's falling in, you're going to put falling into a hole, you're going to put a high probability on negative outcomes. And that's why markets often lurch massively in one direction or another when there's these big events, because ultimately people all of a sudden change the probability they place on outcomes. That's the way I sort of think about elections, because you can realistically in New Zealand, the two major parties are not particularly different. They're not radically different. So from my point of view, I think definitely it is always human nature that people hold off from doing things ahead of elections just because there's a degree of uncertainty. They want some certainty, especially if they sort of think, well, I need to make this decision. It's an important decision, but actually, will waiting 2 months really make a difference? From that point, they will hold off. So there is a reticence to do things. But if we think about that probability structure, it's kind of hard to see a particularly different outcome in terms of the probabilities of the two major parties. Certainly, if you got say you got a massive landslide to green, which made the wealth tax a highly likely probability, that would change that probability distribution. I think you'd see quite a large change in market prices. But it would seem that at this point, that's not a high probability outcome.
No, the two major parties are indeed so incredibly similar that it's almost hard to know what the differences are. I don't know if you saw the leaders' debate the other night where they did a rapid fire series of questions, and both Hipkins and Luxon had the same answers for everything except for one point. It did leave you wondering what's the point of democracy in that moment. But anyway.
In a nutshell, I'm pretty relaxed about the outcome of the election. I think the other way to think about it is, what are the companies you're buying? What are the big companies in New Zealand? You think about your Meridians, Chorus, Contact, even Fletcher Building. Does their business dramatically change, or even, does it change a bit based on the outcome of the election? Possibly for the property companies, the listed property businesses with issues around the treatment of depreciation, yes, you can argue that. But for a Meridian or a Contact Energy or a Spark, that business is not going to change.
Some people think that there's going to be a relief rally of sorts as a more pro-business mindset that, National advocates for will be felt across the business community. How do you think about that in terms of probabilities?
I think it's probably again coming back to that point that people hold off from doing things. So I think you just see that sort of stuff gets put into action again. It is certainly, given the New Zealand market hasn't gone anywhere for a long period of time, it's probably primed for that sort of event. But
Okay.
we'll see. We're not placing new positions based on that outcome.
Fantastic. All right, last one for me is just the New Zealand economy, real economy, was revised out of recession the other day. Didn't get as much fanfare as the being labelled as in recession. Not surprising there. We weight our views to the downside, it seems, as humans. Take us through what's driving a more solid economy, both in New Zealand and in the States. And there'll be different factors, but where's that coming from?
Yeah. Look, I think one of, and to a degree, we've called this wrong, and I think we're not alone in this, is generally most have been fairly surprised that, around the world you've had, this the Reserve Bank of New Zealand raise interest rates more than 5%. It's done the same in the US, and actually in the US it was much faster over a shorter period of time. But it really doesn't, economies have slowed, but they haven't really slowed to the same degree that many would have expected. And certainly, they're not in recession, which would, you'd generally expect, given that speed of interest rate rise, should have been the case. Why has that happened? I think, in retrospect, a number of factors. Ultimately, personal balance sheets. People had money in the bank. They came through COVID pretty well. Much of that, or a lot of that at times, was thanks to government action and things like the wage subsidy, etc. So people still were getting paid, even if they couldn't work. They couldn't spend on things. So basically they built up a bit of a war chest. So that created that, definitely created that buffer in terms of having activity. I think the other one is, in New Zealand, you've actually seen more people working, and actually you've seen wage rises come through. So if I look at sort of household income, similar in the US, household income has risen, and in New Zealand's case, it's been up to sort of close to 10% per annum. So really that has been that buffer against the against inflation and against those higher costs. And probably the last one is that, to a degree, there's, some of those interest rate impacts have just taken more time to come through the economy than probably we'd expect. The lags are longer. Actually, on the last one I haven't touched on here is in New Zealand, we've got more people. And you are seeing that in things like some of the retail sales numbers. Retail sales at a total level are up, but actually, if you took away the number of people, definitely down.
So it's immigration driving it.
Yeah.
Fantastic. At least there's
some
great
positives.
some part of the book, good positive, impulse in the economy. But obviously that will put pressure on interest rates, and so we'll see how it plays out. Thank you very much, Mark. It's been a really, really good session today. I've appreciated your insights. I guess my big takeout, which I hope listeners also take from it, is the importance of a diversified portfolio and how, through time, that will deliver over and above other asset classes.
Exactly.
Great.
Cool.